Ladies and gentlemen, K-Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down slightly here, about 0.3% on the S&P. I think Dow is pretty much flat, but everything else down a little bit. Banks are up today, I think about 1.2%. I remember Goldman Sachs, it was up about 7%. JP Morgan, Bank of America, they were up about 4%. You know, maybe Morgan Stanley also. So market actually was down as much as 2%. We did see about 1.6% or so gap down at open and then continue lower as low as 2%. And then it looks like on the second hour, we did see that tweezer bottom candlestick reversal pattern that needed to see a follow through. And then looks like that was that neckline there. And then on the third hour, we did see follow through there. And then from then on, we did see another follow through on the third hour. Don't worry about that long upper wick. If you actually go to cash market, actually SPX, the index itself, you will not see that upper wick there. So there was this gap down that needed to be filled. And so on the fourth hour, we actually filled it. I mean, if you want to be really, really precise about it, you can see maybe you got very tiny bit left. But let's just call that filled. That's just such a small scale. I don't think it's going to do too much, you know, when we're looking at this technical levels here. But you guys know that when the gap gets filled, what happens? It's going to act as instant resistance, right? So then on the last hour, you can see all of a sudden, because it's been green pretty much throughout the day after the first hour, the red candle came back on the last hour after the gap got filled. There's some weakness there, but brought it back up. The price was able to close above the short-term moving average there. So there are a few things here. It would have been better for the bears if they protected this down gap, right? So this down gap, you know, it would have been better if that was never filled. Then bears got something to work with, maybe get into some kind of a downtrend in the short term, right? But because this gap got filled, that momentum was killed, right? But when the gap gets filled, it's going to act as resistance. So there's a chance where, you know, buyers can try to get back up here now after dealing with the resistance here, right? So even if the price falls back down, there's a good chance that buyers will try it again to break above it. If the gap was never filled and maybe halfway filled and start pulling back, there's a good chance that bears gonna lose this momentum, or buyers gonna lose this momentum. Bears gonna keep pushing, possibly even breaking below 362s and maybe get into some kind of a downtrend in the shorter term, right? And when I say short term, you guys know what I mean, right? When I say micro term, I mean the last couple of days or maybe several days. When I say shorter term, I'm talking maybe couple weeks or so. We are not in a downtrend yet, right? If anything, we're still in sideways mode, right? So we're pretty much trendless in the last couple weeks. We're just moving sideways, right? In the midterm, we're in an uptrend though. So I think if the gap was never filled, it would have been better for the bears, but the gap got filled. I think buyers have a chance to now bring it back up here and then fill this gap if we can able to gap back above 369.20 or so first 2 hours of tomorrow morning. If we can do that, there's a good chance buyers want to go up and fill this gap. A lot of people have asked me that this is ex-dividend gap down. Why does that matter, right? That's not real like trading gap down or organic gap down, right? That's what I used to think, until I start realizing this ex-dividend gap downs actually act as resistance. I want you to go back and check every single ex-dividend gap downs and see how the market reacted in that level going into next couple days up to a week. You realize every single time, almost every time, that level acts as resistance. So now I kind of incorporate that a statistic into my analysis. So when I see this, I don't just look at it as like, well, there was an ex-dividend gap down, so you know what, that doesn't matter. Actually, it does. And even with that, there was that move, and then there was another gap down. You see what I mean? So even with that, market didn't just didn't act like there was nothing there. It actually gapped down and then it continued lower, and then we were never able to get up. And then today we did see gap down again, go back like 3 months ago, ex-dividend day, 3 months ago, another 3 months before that, and you realize following days, right, you will see that price respect that level as resistance. And I started noticing it so many times that I'm like, okay, I need to incorporate that in my analysis and know that those ex-dividend gap downs is going to act as resistance. So that's kind of why I talked about this on Friday as like it was real gap down. And we're going to have to treat it like a real gap down. So their gap is still open. So I think as of today, I still want to be kind of neutral here. Micro term, there is some bullish buying pressure that happened throughout the day today. So I'm maybe leaning more to bullish to neutral in the micro term because we did see some of that strength there, but we're just right. We just filled the gap. I'm not sure how it's gonna react early tomorrow morning. I don't know if it's gonna gap down. I don't know if it's gonna start falling over right away just because we're right on that resistance because the gap just got filled. Sometimes sometimes it's a little bit difficult to guess how the market is going to behave tomorrow. Remember, our job is not to guess what's going to happen tomorrow. Our job is to react based on how the market behave tomorrow, right? So anyway, so let's look. So I'm like I said, in the micro term, bullish to neutral. In the shorter term, I'm going to give it still neutral, right? Just because looking at the short term here, looking at the last couple weeks or so, market hasn't gone anywhere. We just been moving sideways, right? If you're too concerned about short term, you see how this is what the market does, right? You thought that this was a breakout to the upside. Well, that wasn't it. You thought this was breakdown. This is how the market is going to trap you on the both directions, right? You thought this was a breakout right there after breaking above this resistance. Well, that wasn't really the case. You thought this was a breakdown before this thing getting lower. Well, that really wasn't the case either. This is why it's important not only to understand the short term, but you actually want to understand midterm and the long term and the macro, right? So looking at the midterm, I did adjust my rising pivot. It was actually like this. It actually looked more like this here, something like that, and I actually was here. But what I did was I actually adjusted it just to accommodate the current price action here, like that. So what happens is a lot of people don't understand this, right? A lot of people ask me, like, why did you adjust your the support level? Sometimes I do adjust my my moving averages based on prices behavior, because market is always constantly discovering new support level. Because if you're so fixated, let's say you drew your support like this, right? Okay, so let's just say you drew your support here. Let me just clean everything out, right? You drew your support like this, and then you thought if we break below this support, rising uptrend support, you thought that's bearish. So either you thought that's a short setup or you need to get stopped out of your positions. Well, either way, you got trapped, right? You close out your longs, well, you're trapped because this thing went back up. If you short it, well, now market just reversed on you, right? So market is always constantly discovering new support levels, right? So what you have to understand is sometimes this is going to be the support, and then later that's going to be this support. You see? You see what I mean? Maybe this was a support, or maybe now this is the support. You see what I mean? So market is constantly, because nowadays I think just because everybody's looking at these levels, and market just knows how to take your stop, how to shake you out, and then moves to the opposite direction. So make sure you're not in it, right? Market is just great at that. I don't know why. This monster that we've created, right, is a master at this. This is why I adjust my moving averages accordingly, and then also I adjust my support levels, because market is constantly doing that. Market is constantly discovering new levels. That's why, you know, because I mean, think about this. If I'm looking at the daily chart, we're just looking at this, man. It's really, that's all we're looking at. That's not a whole lot of level to really look at. So it's okay to kind of give it a little bit of wiggle room, right? Something that I say a lot is if you get into a position, you gotta give it some wiggle room to make sure it moves around, because if you're choking your position to death, you're gonna get stopped out and market is gonna go on without you. You gotta let it kind of go up and down a little bit, because this kind of stuff happens all the time. So in the midterm, I still want to say that we're still in an uptrend. We are still cultivating higher lows, right? We're still cultivating that higher lows overall, right? It's just in the short term, which is looking at last a couple weeks here, we're just been moving sideways. And remember, every time the market is consolidating, there's going to be shenanigans, right? Because everybody's just anxious. Because every time when there's market is consolidating, right? When the market is moving sideways, everybody's so anxious. Because bears thinking that's the top, it's topping pattern, it's weak, that's why it's not going anywhere. So then they think this thing is gonna crash down. Bulls, they think it's a consolidation, so breakout is imminent. So once we see what it looks like a breakout, well, bulls who are waiting to see quote-unquote confirmation, they jump in and then start to panic when it starts coming down. Bears, as soon as they see this breaking below this support, they think that's quote-unquote confirmation to short. And the market goes back up and they're in panic. Because you're looking at way short term, like this micro term. You're putting too much weight, you're paying attention too closely in the short-term, micro-term fluctuations, right? So if you want to kind of not let that happen to you, understand more of a bigger picture, the big picture, right? Understand the daily chart, which I do on the weekend analysis for you guys, right? Then you're not gonna be like freaking out just because we did this and did that. This is nothing. Like I've done nothing in this price action. It's just I've done nothing, right? Like I didn't close out my shorts because I got stopped, or I didn't short, obviously. I didn't go long. I didn't get stopped out of my longs just because we saw this recent pullback, right? Because obviously I'm much longer term in this market. Let's check out that oscillator here. So oscillator, you can see we did see another cross here. It's not a good sign for the bears because we've seen that before here. These few times, or you know what I mean? There are times where market did see that initial move to the upside, might have came back down to retest. Here came to retest, came down to retest, maybe comes down to retest this time too. I'm not sure. But initially, after that signal, we did see the move to the upside. So that cross up is not looking too good for the bears, just because we're still in a midterm uptrend with higher lows and higher highs. So we want to still give benefit of the doubt to the buyers overall, right? In the midterm, short term, kind of a more neutral, right? Because we've been moving sideways, consolidating for a couple weeks now here in December on the S&P. Micro term, we had a little bit of a move today after that dip was bought. Only question is, are we going to see a continuation tomorrow? I'll come back for you. Enjoy your evening and good luck trading tomorrow.